Mohammed Haleem Khan, the former divestment secretary, and Taher Badshah, CIO equities at Invesco. Gentlemen, thanks for being with us. Mr. Khan, if I could come to you first on the resurgence that we have seen across the PSU names, do you think that this will continue? In the past, and we've discussed this, several times, across the channel, there has always been some optimism followed by somewhat of an anti-climax. Do you think this time will be different?
No, what you expect to be different? Tell me clearly. Because, see, 1990, when we decided...
Well...
Yeah.
Go ahead, Mr. Khan.
I said, see, there is only a change of pace. Because in 1990, when we decided to go for the market economy, and started, invoking the market forces to take care of the issues of equity and efficiency in our political economy. So the pace was set. I mean, first steps were taken. Now, as we evolve over a period of time, it was bound to happen that all those assets which are not efficiently performing has to be handed over to the market forces so that we can optimize the result out of those assets. Now, if you have any specific aspect in mind, then say come forward, then I will be able to elaborate a little more. But for me, it is only a story started in 1990, which is unfolding. And I don't find anything, something which I can say is against the grain of the approach.
Sure. Okay, we'll come back to that, Mr. Khan. Let me get Taher in here for a moment as well. Taher, investors for about 12 to 15 years when it comes to those PSU names have been hit hard. There is a segment of the market that will not touch some of these stocks with a barge pole, although some of them are now warming up given that the government seems to be intent on its privatization agenda. Do you think that regaining full confidence, lost confidence will still take a little bit of time, or do you think the case is looking a lot more positive this time around?
Well, with regard to disinvestment, we've clearly seen things not unfolding the way one would have liked to expect, at least from a market standpoint. But I think that is not the only story which is presently, keeping the markets excited about the PSU space. I think the whole agenda or the expectation out of the PSUs today is of the fact that, they are a lot more levered to an economic recovery, and they operate in many of the cyclical or the core sectors of the economy, whether it is in case of oil and gas or utilities or power or maybe even banking, of course, to some extent. So I think the excitement around the PSUs is that they are generally the larger beneficiaries of an economic improvement or a cyclical improvement, and I think that is what is at this stage front and foremost. I think along with which also the fact that the policy making, of course, from the government of India in the last some months and over the last few years as well, incrementally has been more positive. And, if that is something which can gradually progress, and I'm not talking about disinvestment alone, I'm talking about general policy measures which can benefit, whether it is, the various, yojnas which are available for the farm sector, whether it is DBT, whether it is Swachh Bharat or whatever else. I know even a lot of reforms around the banking system and all that. So I think all those initiatives are generally a lot more positive or in terms of outcomes for the PSU space than for the private space. And to that extent, that is what is the second level of excitement which today the markets are looking forward to. Last but not the least is the fact that, from an investment standpoint, again, this is a space where we are not necessarily yet constrained by valuations here, like we probably are in some of the other pockets of the market. So I think valuations are still reasonably favorable, and we've seen balance sheets of PSUs generally improve in the form of better, lot more buybacks, more dividend payouts, better capital allocation over a period of time. So I think all these things are kind of adding up to the overall attractiveness of PSUs, at least in our mind. Disinvestment probably could be a cherry on the cake as and when it happens, but as we all know, this is something which is subject to a lot of ifs and buts. But I think at this stage, we would like to believe that some things which did not get achieved in the last 2 or 3 years probably can get achieved in the next 12 to 18 months.
Mr. Khan, the attempt this time is for strategic disinvestment. It is not going to be disinvestment, it's going to be strategic sale. How easy do you think it is, frankly speaking, for Government of India to go ahead with a strategic sale? Because that's a different process. You know, you list a company, you sell some shares in the open market, keep on doing ETFs. That's a very, very easy route. That is disinvestment. But when we are looking at Air India, Shipping Corporation, Container Corporation, BPCL, do you think this is going to be difficult and very, very difficult to actually get it concluded?
You see, you can't club all these, PSUs which you have talked about just now, because it depends on the economic situation. For example, Air India. Now, Air India has always been not a very easy thing to go about. And with COVID-19 around and so much of restrictions on movements and air traffic, it is going to be much more difficult. I'm sure about it. There are certain sectors where the elasticity of demand is not so adverse against disinvestment. For example, this oil and gas sector. Now, in the foreseeable future, even with our the global economy shifting towards electricity-based transport, I don't think the demand in the fuel sector is going to be adversely affected to a great extent. So selling a PSU, which is in that sector, may not be all that difficult. Again, you see these PSU in the fuel sector, if you look into their balance sheet, they are doing wonderfully good job. Their dividend yield is fantastic. So even whether you do the incremental disinvestment in terms of offering 10%, 5%, or you do the strategic investment, I really don't feel that there will be much of a problem. But yes, you are right. Air India is not easy to privatize. Keeping in view the air civil aviation sector in the private sector, the type of pressures, the type of economic uncertainties, the type of revenue they are able to generate is not going to be easy. So I am not very hopeful that it will be easy for the government to disinvest Air India. But things like BPCL or Container Corporation and things like that may not be all that difficult.
Mr. Khan, but very frankly, if I look at the private sector interest, unlike what we thought, there is going to be a line of suitors for BPCL. There is going to be a crowd when SCA and Container Corporation would be put on block. That is not the reality. The reality is that while these PSUs are strategic, they have land bank, they have a lot of advantage, it's not that private sector is really jumping on top of each other to participate. Look at BHEL. L&T first wanted to participate, now they've decided they do not want to participate. So what I'm trying to say is that the government intention may be right, but you need two hands to clap.
No, I agree with you, but then you see, you cannot extrapolate the current situation to look into the merits of the individual PSU. Because these PSU which you are talking about, they are fantastically doing. But the point is that what is the position of the economy? And COVID has changed the paradigm hell of a lot. So anybody who is working in a particular sector, and even though the sector is not, is going to change much, but because of the downturn which has been, brought into the picture, COVID, most of the economies are, either southward or almost parallel. We may talk about the individual cases where you can say that there is a V-shaped recovery, but the country's economy are going to have serious headwinds. So in this type of situation, somebody investing big money may find it difficult, unless of course they have so much in the balance sheet that they find that parking of funds in other areas may not be as profitable as investing in a PSU. So these are the limitations. For example, you talked about the L&T and BHEL. Now, we will have to go into the financial position of L&T. I'm not saying that it is precarious. It is very good, very healthy. But then, is it good enough to invest in a big capacity like BHEL? Now, if that is not the order book position justifies, and they find that it will unnecessarily strain their liquidity, then probably they may find that, okay, let us wait for another day.
Right. Taher, you have a PSU-specific fund as well as at Invesco. Just wanted to understand as to how is it that you are approaching some of these names. While we are already seeing a big movement in the stocks, many still believe that it's very short-lived, and the big re-rating in the stocks is only going to happen once the first disinvestment or a privatization successfully goes through. Do you also believe the same?
So we have never approached. So we've been running this strategy, for the last more than a decade now, and pretty successfully, at least keeping in mind the fact that it is a PSU strategy and not easy from the point of view of return generation over shorter periods of time, at least subject to a lot of environment and government-related matters, policy-related matters. So in that context, the way we have approached this fund always is that we've, even within the PSU space, we've just gone about selecting businesses the way we do it for our regular private sector companies, for example. We try to look for the best quality of businesses even within the PSU space. And there it is not as difficult because quite a number of these PSUs are beneficiaries of very significant competitive advantages. And like as I said, they've generally had reasonably healthy balance sheets. So our approach has been exactly the same as what we have for many of our private sector entities. Moreover, what has happened recently, which has given us a little more, bandwidth, if I were to use that word, with regard to stock selection within the PSU space or investment within the PSU space, is that we're finding now a good number of B2C entities within the PSU segment appearing as investment opportunities through new listings and IPOs, etc. So we don't need to necessarily only look at PSUs from the point of view of heavy balance sheets or investment-oriented companies. There are quite a number of these which are now levered to the direct consumer. There are many of these new platform businesses which have emerged over a period of time, and that allows for a better mix of the overall PSU profile. So we are able to enhance the overall return on equity, return on capital employed profile of these companies. And lastly, as we also mentioned, that we are seeing many of the PSUs actually change tack with regard to their overall capital allocation policies, whether it is with regard to investment from cross investments within companies, within PSU companies, whether it is with regard to dividend payouts, stock buybacks. In fact, I think our statistics tell us that the aggregate of the BSE PSU index with regard to dividend payout is better than that of the BSE Sensex for that matter. So I think that this is what has driven our approach towards the PSU fund. And I think so long as one keeps that kind of an approach, we will, as we have been able to do over the last 10 years, we've been able to significantly outperform the BSE PSU index at least.
Okay, great to get in that perspective from you, Taher. And Mr. Khan, thank you so much as well for taking the time out and sharing with us your insights on disinvestment.
Thank you very much for having me.